Bitcoin has been consolidating now for close to 2 weeks. When will the next move occur and where will it take us? Let's go ahead and find out. Okay guys, welcome back to the channel. Thank you so much for tuning in. Hope you're all having a fantastic day today. We're here to take a look at Bitcoin on the smaller time frame. As you know, Bitcoin is now being consolidating sideways for about 12 days. We're going to be discussing the possibility for a continuation upwards, using that $30,000 level as a trampoline to push the prices higher, or the possibility of a correction and what we need to see exactly on the charts for a correction to unfold. Before we get into the video today, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, the economic data, and relevant news events. No hype, no BS, pure, raw, honest technical analysis. So that's the kind of content you are interested in. Join us on Telegram as well. We post daily updates in here for our videos, charts, educational posts, news events, and all the relevant information you need to stay on top of cryptocurrency and Bitcoin as a whole. If you are interested in taking your trading to another level, join our VIP community. We post exclusive updates. We post trading signals with entries, targets, and stop losses, full justifications for every trade we take to help educate you guys, and our charts as well. Including that, you'll get access to 4 separate group chats, our trading chart and education group chat where we teach you how to trade. We have members in there posting their own trades and charts, such as over here, our altcoin analysis chat, our general chat, our help chat, and all of our videos as well. Everything designed to not only make you guys profits if we can, but also, most importantly, become better traders. If you're interested in improving your trading, join our VIP. Click the links on the top over here in our pinned comments in our free channel. You'll find all the information, including our trading track record, 29 months of log data, 671 VIP trades, 79% win rate. Absolutely phenomenal. Let's get into the video, starting off with the economic data and market data. So for the market data, we can see Bitcoin's 24-hour volume is creeping back up. We had a very low volume day yesterday. Over the weekend, of course, volume tends to dry off, but it was a particularly low volume day, which was, again, quite surprising, but also not surprising versus the weekend. So 34% up in the last 24 hours, bringing us to 67 billion. Looking at liquidations, we have seen a 77% increase. So a pretty strong increase there, bringing us to $67 million in liquidations. Looking at the yearly returns currently, and quarterly returns, we can see Bitcoin has had now 2 green quarters, pushing into our 3rd quarter, currently up 0.71% after closing just shy of 12% in June, getting Bitcoin over that $30,000 mark. Now, if you wonder why 30,000 is important, go watch our last video post that we discussed all about why 30,000 was significant to close above, what it meant from the 4-year cycle and macro direction perspective. In today's video, we're not going to be going over that too much. We're going to be focusing more on the smaller time frame price action. So highly recommend check that one out. As per the volatility index, we can see the volatility index hasn't really changed too much. We are still pushing sideways on the 60, and for the 30-day period, we are still kind of pushing sideways. So not really too much happening here, but we can see a slight discrepancy between our overall volatility slightly moving down and overall price action slightly moving upwards. We'll discuss that when we get into our analysis later on today, but these discrepancies are generally signs of weakness, particularly when we have decreasing volatility and a rising price. It signifies prices either moving into resistance or it is consolidating at a level of resistance, and that is happening right now, right? We broke over the $30,000 resistance. We are now testing this $30,000 level as a support. We're trying to see if we can convert what once was a very high time frame resistance into now a high time frame support, and if we fail to do so, a correction will occur. But if we do remain above that long-standing resistance, 30,000 will provide a solid trampoline for the price to push higher and upwards. Moving on, liquidations, always a fun time taking a look at these. We can see longs and shorts have been equally brutalized in the last 24 hours. Again, the price action, guys, has been ridiculously choppy. If we take a look at these liquidations, we can see massive long liquidations, massive short liquidations, and if we do look at the price action just in that last, 24-hour period, we can see some huge, absolutely huge wicks toward the downside. Taking a look at some of these wicks over here, just in the last 24 hours, we're seeing, 2 or 3% toward the downside over here, followed by these large retracements and strong long wicks back up to the upside. Now, yeah, it's only about 0.5%, 0.4%, but it's happening within a minute. It's happening within 20 seconds. These long liquidation wicks are really catching some high leveraged positions, and people are overexposed in this range and really going for those, that dumb money, that free money in this chop zone. And that is what a chop zone is, right? We have this sideways consolidation, a lot of chop around it, and it's deciding whether or not it's going to push upwards into our next resistance or break down and continue downwards. And we'll discuss all of that in the video when we get into it today. But let's go ahead and jump into the economic data and the DXY. So as per economic data, we have some key events coming up. The main ones really being NFP and unemployment rate, which is going to be on the 7th of July. This is GMT plus 10 time, so Australian time, Brisbane. And then the next one being obviously our inflation data being month on month, year on year, and core inflation, that one being on the 12th of July. We also do have PPI, which is going to be sitting on the 13th. Now, these are all leading indicators of inflation and obviously inflation data itself, which again is going to be very suggestive of what interest rates could potentially be doing going forward. If we take a look at the Federal Reserve, they've announced that they're more likely to take a few more rate hikes moving forward. Now, I do want to get inflation down to 2% over the next 2 years. At that rate, they do need to start keeping interest rates up at least around 0.25%, or at least pushing a little bit higher. They can't keep it paused. It's not going to do enough to bring inflation down. Let's go ahead, guys, and jump into the DXY. As you can see, DXY hasn't really moved much. Again, last time we take a look at it was, of course, that market close, and the market only opened about 4 hours ago. We haven't seen too much, and therefore the same analysis stands. We need to break above this downtrending dot of resistance to see any sort of move upwards. This will be bearish for the markets. We need to push downwards and lose our support here into our next range. This will be bullish for the market, so watch out for the next move. The same goes at S&P 500. Not much has changed in the last 24 hours, or over the weekend, should I say. We're still looking for a weekly candle close above, 4,500 to really invalidate this bearish structure and push upwards. Until then, we are looking at, potential divergences over here and rejections back toward the downside. So don't get your hopes up too much for the S&P 500 here. If you're buying here, you really missed the buying opportunity. Like we said, the buying opportunity was a weekly close above this horizontal green line. That was our buying opportunity. That is what we said. We expect the price to move upwards to retest that uptrending resistance again. If you're buying here, you're jumping in late. Your risk return is not in favor. I would not be advising to do that. I'd actually be advising against that. At the end of the day, guys, you want to trade with direction, but also with risk, with probability of success. Your risk return has to be favorable. You can't just be trading an uptrend versus an uptrend. You have to have a good, adequate risk return for each trade you make, even if you are trading with the market. That's very important to understand. Next goes the Dow Jones. Same goes for Dow Jones, guys. Not going to get into it too much. Above the resistance, good. Below this uptrending support line, dotted trend line is bad. Let's get into Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Guys, now and discuss what is going on, and we'll really briefly touch on the macro and then get into the small time frame. So if we take a look at this chart, this is going to be our range-based biases based on our structural levels. We can go ahead and identify what is happening here in terms of a macro bullish, a weak bearish, a bearish, and a macro bearish trend. If we take a look to the right, these are our levels. We have our red levels as resistances, our green levels as supports. I have not yet changed this one over to support. As we can see, we do have our larger resistance here at 28 to 30,000. The reason this is still resistance is because it hasn't been tested on a higher time frame yet, being the monthly chart as a support. We've only just initially broken out of that level, and while we've just broken out of that level, it can actually be lost again. So although the probability of it being lost is quite low, it has to be tested as support / verified as support. So we do need to see another monthly candle close above there to actually validate this area of support. Until then, it is actually going to be a resistance / support depending on what time frame we're looking at. For now, on the weekly, on the daily, it is support. For the monthly, it is not a support. For the smaller time frame, it is definitely support. But for the presence and for the sake of our macro analysis, we're going to keep it as per what the macro chart would suggest. Now, that doesn't mean we are at an area of resistance. In fact, the next area of resistance is sitting over here at 31,300 to 32,000. Now, I want you to remember that level, because we'll come back to it and discuss it in a lot more depth in the smaller time frame analysis today, because it's a very key level. So 31,300 to 32,000. Looking at the trend-based bias, we have been in a weekly uptrend. We have been in a weekly uptrend ever since we broke above this key level of resistance over here. This was a 300 plus day resistance. It is now a support. You can see that we broke above it over here in early March. That sent us into a weekly uptrend. The reason we entered a weekly uptrend was because we broke above, and I want to go ahead and bring up these indicators in a second. I just need to go ahead and bring them back up. We broke above a few things. The first one being we broke above the 50 EMA, okay, signifying a shift in direction on the weekly chart at that same level. Again, secondly, we broke above the 200 moving average. I want to go ahead and bring up our moving average over here. Let's go ahead and pop into 200 moving average. So we pop into 200 moving average, we're going to see we actually also broke above that 200 moving average on that same date range. So the crossover of both of these moving averages signified a shift in strength. And then the break above this horizontal resistance range signified a shift in trend. This directional shift upon this breakout of that resistance signified a shift weekly. So we went to this weekly uptrend. The weekly uptrend was intact and is still intact. You can see that we came back down and retested as support. Again, we said if we lose this level, we enter a bearish trend. Until then, we are bullish. Thankfully, we actually pushed upwards, breaking upwards. So in terms of our trends right now, we are weekly bullish. We are establishing a macro bullish trend as we have broken above 30,000, and the bears do not have control on the higher time frame until two things occur. Number one, for the weekly trend to flip from strong bullish into weak bullish, we need to lose 28,000, okay? 28,000. For the weekly trend to flip bearish, we need to lose 24.4. At the same time of 28 being lost, the trend will flip from bullish strong to bullish weak on the weekly, as the daily trend will be lost, and therefore we'll have a weak bearish daily trend while we have a bullish weekly uptrend. Okay, so keep that in mind. The bulls are in control according to our structural levels, no doubt about that. Let's get into the smaller time frame, as this is what we're all here for, and there's a lot going on. So if you remember those key levels we discussed before, the key level number one was going to be 31,300 to 32,000. And again, I haven't got these coordinates in just perfectly, a few dollars short. So I'll go ahead and put those in now. So 31,300 to 32,000, excuse me. Those are our key levels. Looking to the downside, our key levels are going to be sitting between 30,000, okay, and 29.8k. You can see this area was a decent area of resistance. We had a triple top resistance over here. Then we had 1, 2, 3, 4, 5 single retests as support within our current consolidation range. So we know that 30 to 29.8 is a significant area of support for the current structure developing above 30,000. Again, along with that 30,000 being the major macro high time frame horizontal support. So we do have a high time frame confluence within the smaller time frame resistance support. Sorry, what does that tell us? Well, that instantly tells us this level is a bearish trigger, meaning There's a whole heap of liquidity underneath this level here, guys, and the price pushes below it, it is likely to come down and grab all of it, pushing towards our next chunk of support, which is sitting at 28.4. The 28.4k support actually extends just a little bit lower. It extends all the way down. I'll go ahead and actually drag it downwards to 28,000. Now, this is the 28,000 level we were discussing before in that higher time frame chart. If we go back to this chart over here, you can see the 28,000 level is right over here. So the daily trend is technically up. It is strong until this level is lost. When we lose $28,000, that is when we are at risk of a higher time frame correction downwards to go back and retest that 25.2 to 24.4k level. While we remain above our 28.4 to 28k level, every retracement that occurs should be considered healthy. It should be considered a healthy retracement, ready for that next move upwards. If we look at altcoins, we look at Bitcoin, everything is consolidating nicely, and everything should be consolidating toward the upside according to our macro data. There are a few elements of risk, such as the economic data, which could potentially throw a spanner in the works and push the price action downwards. We've discussed that. We're talking about the ETF data. If the ETFs get denied, that could potentially push the markets down. There are a few risk factors that could push the markets down, but from purely a technical and structural perspective, on a macro chart, we are looking like we're moving upwards. From a weekly chart, we are looking like we're moving upwards. From a daily chart, we are looking like we're moving upwards. But from a smaller time frame chart, because smaller time frame reflects into the higher time frame, the smaller time frame chart is suggesting something a little bit else right now. The smaller time frame chart is suggesting we have a horizontal chop zone at the moment. This chop zone is actually resetting momentum. Therefore, we could potentially see one more move up to retest 32,000 before we either see that correction downwards to this range or a straight push and continuation through. But it does look like our momentum is curving out, okay? We have overall downtrend over here. We are curving out. We are creating some lower highs, higher lows over here on the RSI, suggesting momentum is starting to turn back upwards, okay? And if we do get that momentum shift, we could potentially see the price move back upwards to retest these high points one final time. Now, the reason it is so hard to say for certain over here is because these chop zones have some incredibly long wicks and volatile moves, which can often complicate or present false flag data on our technical levels. So we do need to dive into an even smaller time frame and try our best to add some structural levels or key trigger points to the current consolidation. So we know already on the smaller time frame, our key bearish trigger is going to be 28 to 30,000, meaning a loss of this level. We can see we found support once, twice, 3, 4, and numerous times over here. A loss of this level will move the price downwards. We know that, okay? That's a certainty. Awesome, we got that. According to our volume range, we can see a drop off in the VRPV. Awesome, we have volume confirmation, we have our structural confirmation, and we would have momentum confirmation when that occurs. So we have 3 points of confirmation. When we're looking towards upside, we need to identify a bullish trigger. But the argument can't be, okay, we wait for a breakdown, then we short. We have to think about, what signs we're looking for signals that the price will actually continue into this range. So we have to look at trigger points for the bullish perspective. And what I would come to conclusion to be would be the trigger points between 30,800 and 31,000. This small little range right over here between these two horizontal red lines. This is going to be that trigger point. So we'll go ahead and text this one out to be red, drag it down to 38. And this is kind of going to be that bullish trigger point. We've seen numerous retests of this level toward the upside. Again, retest over here, rejection. Retest over here, rejection. Retest over here, rejection. 2 retests, both rejections. And of course, we saw a strong push into that liquidity grab on the top side. So what we actually happen to run into over here, if we eliminate these outlying pieces of data, we have a horizontal consolidation. Now, a horizontal consolidation is neither here nor there. It is neither a bullish pattern, it is neither a bearish pattern. It is actually a neutral pattern. Now, when we take a look at probabilities of continuations in terms of directional moves and horizontal consolidations, we generally assume that the general trajectory of a horizontal breakout will commence in the direction of which the price entered the channel in. Meaning, if we entered the horizontal consolidation from the upside, from the bottom side up, we are likely to continue that consolidation from the bottom side up, meaning there is actually a slight probability favor in terms of a smaller time frame continuation upwards than there is downwards in terms of the structural and technical perspective. That doesn't mean the downward move won't happen, but if we're looking at our horizontal levels, we're looking at our structural levels and our confirmations and probabilities, the probability is slightly in favor of a move upwards. And I say very slightly, which is only about like a 13% chance higher. It's about a 63% chance it actually breaks upwards and continues upwards and completes the measured move. The measured move being the move from the high point to the low point, which would actually take us directly to 32,000. Again, this isn't hypothetical. This isn't, random numbers. There's a reason why it lines up identically to that number is because the measured move does actually suggest it would do. So if we do see a break above this range, I'd be expecting one more push up here. That could potentially create a divergence in which the price would come all the way back down toward that 28.4. That is a scenario that we'll be watching to play out. There's a very possible scenario. Now, whether or not that happens after our breakdown or it happens over here, because again, if we do lose this level, we're going to see that move play out, or at least we're going to see the vast majority of this move play out. We might not go all the way, but we might see, 29.2. Or if we break upwards and see a push upwards, again, that $32,000 level is a major resistance zone and will be a very ideal level for a healthy high time frame correction to occur that can bring us back down before we create a higher low, okay, a higher low before we ladder and push back upwards. So looking at the charts, guys, I wouldn't be too, eager to be jumping into too many swings. I have personally got a lot of longs on altcoins. We've got FTM, we've got ETH, we've got Link, we've got a few other ones going. Again, so I can afford to take some short positions. Look for coins that are overextended. Look for coins that are showing a lot of weakness in comparison to Bitcoin. And you can look for shorts at resistances as hedges against your current longs. So remember, your shorts at right now are going to be hedges. If you're scalp trading, you can continue to scalp trade a smaller time frame. Shorts and longs, it doesn't matter. Scalp trading, remember, we care about the higher time frame direction all that much. We care about the relevant direction of the current structure in which we're trading. For example, if you're trading such as a rising wedge, if we do have one, you'd care about the relevant direction of that rising wedge, whether you're range trading or whether you're breakout trading, then you'd care about the direction downwards. If you're trading the current swing trade for this horizontal channel, again, you can range trade it, buying these lows, shorting these tops, okay? So again, you can short over here, stop loss above, or you can look for these breakouts if you're going to breakout trade it on the downside or on the top side. Again, with the breakout trading, due to the fact that we've seen so many false breaks of this range already, you do have to keep those tight stop losses, as you could run a risk of actually buying low and selling, or should I say buy low and then selling up over here high and short, or worse, again, if you end up shorting over here, you could end up getting wrecked as it goes upwards if you don't have a stop loss placed. So keep that in mind, guys. Thank you for watching, and I'll catch you guys in the next video. Cheers.